Hey everyone, and welcome to Cash Out episode 3. I'm probably going to take off the hat in a little bit. Actually, I'm going to take it off right now because with these studio lights on, it's freaking hot. So, Cash Out is my weekly TV show where I recap the previous week and we also look forward to the following week and talk about what's going on. And I'm also going to answer some of your TikTok questions. This week there weren't very many TikTok questions that I couldn't just answer on the app. There was only one that stood out, which I'll answer. And I want to talk about a couple different things in the episode today. One of them being Tesla, which is going to be added to the S&P 500 tomorrow, because today is Sunday, and what that means for your stock, what that means for your investment, and what people on the street, that's Wall Street, think about this move. Tesla is extremely overvalued, right? If you were to look at their P to E ratio, which compares the price of the stock to the company's earnings, it's extremely overvalued. It's called the multiple, and I'll link some videos below if you want to learn more about how to calculate a P to E ratio or learn more about it. The P to E ratio is one of those ratios that people look at when it comes to a stock to determine whether the stock is overvalued or maybe they're getting good value for the stock. So what does that mean? If the P to E ratio is pretty small, that's usually, like these days, I would say probably under 70, but many years ago, a P to E ratio that was in a good range was around 30. Nowadays, we see P to E ratios where it's trading at like 120 times earnings, right? Like the P to E ratio would be 120. All that means is that the stock is trading at 120 times what the company's earnings are. So maybe, in other words, it's overvalued. The price is a little too high for what the stock can deliver on. And that means that a stock might be overvalued and might pull back, might correct. There was a time many years ago when Amazon had a very high P to E ratio. I don't remember what theirs is. I will edit it into the video. But there was a time when Amazon had a very high P to E ratio and everyone thought, oh, Amazon is so overvalued. Well, the way that you get your P to E ratio lower is either the stock price drops dramatically to be more in line with your company's earnings, or the company starts making more money. And that's exactly what Amazon did, right? You think back to the beginning of Amazon. Amazon was books. That was it. They just sold books. But then gradually over time, they started moving. And this is something else I want to get into and talk a little bit more about when it comes to a company like Apple as well. So I'll pivot. I'll pivot off of Amazon and start talking about Apple next, and how that relates back to Tesla being kind of overvalued. So Amazon started making new products, right? They didn't just sell books, they sold CDs, they sold videos, they sold other stuff, and gradually over time they started adding toys and they started adding clothes and they started adding other stuff. And now we see what Amazon is, right? It's not just consumer products, right? But it's movies, it's music, it's Prime, it's their television. They've got Alexa, they've got all those little house things that you can say like, hey Alexa, and she's like, yeah, what? There's all kinds of products that Amazon has that allows them to generate more and more income. So over time, the price of Amazon didn't get slaughtered. They just started making more and more money. So they were more in line. Their stock price was no longer overvalued. So you might hear someone look at Amazon, right? You might hear someone look at the stock price of Amazon and be like, $3,000, that's expensive. Because it is expensive. It's $3,000. That's a lot of money. That's a couple months rent in some places, or it's 1 month's rent in other places. And then you'll hear some know-it-all stock guy who likes to go, well, technically it's not expensive because the P to E ratio means that it's a fair value for what the stock price. When someone says it's expensive, they're not talking, I don't think most people are talking about it's expensive in the sense that it's overvalued. They're talking about it's expensive as in I can't personally afford a share, give me a break. And that's similar with Tesla, right? We look at Tesla, we go, it's expensive. Right? It's expensive. It was $1,000. Now I don't remember what it is today, but it's a lot. It keeps going up. It never stops, right? I think it was 600 and 400. Now it's 600. Like the stock, it just doesn't stop. And when someone says Tesla is expensive, they can mean it one of two ways, right? They can mean it like, I can't physically afford one share. It's expensive. Or they mean it's expensive. It's extremely overvalued. because they don't make enough money to justify that high stock price. Nonetheless, they're being added to the S&P 500 tomorrow. I don't know which direction tomorrow is. What does that mean? It means a couple of things. One, it means that all of the index funds that everyone just loves talking about on Instagram and TikTok are going to have to buy Tesla, right? If they're an S&P index fund that tracks the progress of the S&P, well, you got to own all the stocks that are in the S&P 500, and that's going to include Tesla. So a lot of these S&P 500 index funds are going to have to buy it. A lot of funds will have to buy it too, not S&P, just mutual funds, regular index funds, tech index funds, growth stock index funds. They're going to have to start buying the stock. And maybe they already have, but it's going to be the institutions that are going to do the majority of the buying because their funds need to hold. I think I read somewhere that it was $80 billion that had been dumped into Tesla stock. So what you end up having is a humongous surge in stock price, right? As all these funds start piling in and loading up and buying Tesla, the stock price is going to increase. That's great if you're a Tesla investor. There are some concerns though. The concerns are once these funds start getting profitable, they're going to start trimming back their position because they don't like to be in stocks that are perceived as very high risk. And a stock with a 1,300 multiple or P to E ratio is considered high risk. So what I think one scenario could be with Tesla is all these funds are going to pile in on Monday. They're going to drive the stock price up. They're going to hold it for a period of time. And then they're going to start taking their profits as it has kind of maybe plateaued or hit its ceiling. You know, these stocks, they can't go up in perpetuity forever. Sometime there's going to have to be a reckoning. And with Tesla, in this example, they're not making enough to justify their extreme price. Some people will say it doesn't matter because it's a long-term hold. You buy it, you hold it on the belief that Elon Musk will deliver huge down the road. And he might. This brings me to Apple, which I will tie into Tesla. I did a video on TikTok the other day. Someone asked me, they said, I'm selling all my stock in Apple. Do you think it's a good idea or a bad idea? And the reason that person was selling their position of Apple was because they thought that the iPhone sales were dwindling and people were losing interest in the iPhone and they were just kind of moving on. These iPhones every year, it's getting tiring. They're not innovating at the pace that I want, so I'm done. The thing about these huge tech companies is you can't innovate at a large scale every single year, right? At a certain point, talking about plateauing, you're going to plateau. At a certain point, you're going to have invented and revolutionized the phone as many times as you pretty much can. And every year, you're going to make these minor little tweaks. The camera's going to be a little better. It's going to be smoother. It's going to have a higher thing. It's going to have a lower thing. It's going to have a different plug. It's going to have no plug. They're going to make these tiny shifts throughout the years. But at a certain point, what's going to end up happening is a lot of people are going to say, they're not innovating anymore. I want crazy new tech every single year. And that's just not realistic. So people start saying, well, I'm done with Apple because their phones aren't like hot shit anymore. Here's why that's a problem. And the thing that I think is so funny about this is that we have people who are looking at Apple going like, they're not inventing cool phones anymore, so they're done. Do you honestly think that a $1 trillion company, right? A $1 trillion company has no plan. You don't think that they see sales of the phone slowing gradually? You don't think that Tim Cook is sitting there going, we'd better start putting something else in the pipeline? Here's the thing about Apple. I said this in my TikTok video too. Apple is that company that creeps in the background, right? When you think back to the beginning of time with Apple, or at least since the early 2000s, we had LimeWire, we had Napster. For those of you who are young and don't know what those are, it's illegal music streaming. Nobody was paying for it. Someone who owned the Metallica CD like myself would upload it onto my computer, upload it onto Napster, and then people all over the world could download that Metallica album for free. And eventually they ended up getting sued by Metallica and other bands too. So you had LimeWire, you had Napster, you had all these like these little MP3 players that you could buy at CVS or like Circuit City or Best Buy or whatever. And they were cheap and they were, they could hold like 10 songs or an hour's worth of music or whatever. And Apple was in the background looking around going, eventually these sites are going to get sued. Eventually, Napster or LimeWire, they're going to cease to exist because what they're doing is illegal and they're being sued by artists. And these MP3 players that exist, this one's okay, but that's what sucks. This one's okay, but that's what sucks. This one's okay, but that's what sucks. How can we take this technology, this music streaming, and these MP3 players and revolutionize, right? Apple doesn't necessarily invent all of the time. They just revolutionize. They're in the back looking and seeing at what's going on, who's failing, who's winning, who's doing a good job, who's doing a bad job. And Apple swoops in and changes it. That's Apple's thing. That's what Apple does. They creep in the background and then they attack and they put everything together. Think about the phone. I have my Palm Pilot for my organization and my calendar and my emails and stuff. And I have my telephone to make telephone calls. And I have my digital camera to take pictures. And I have my MP3 player to listen to music. And Apple is watching all these different products going, God, I gotta carry like 4 things at a time everywhere I'm going. What if we combined it all into one phone? And the phone was the phone, the camera, the computer, the email, like the Palm Pilot, and the music, all in one device. That's what Apple does. And then they will absolutely revolutionize and maybe copy a little bit from other phones and change the game. And eventually, they're not stupid. These people who run these trillion-dollar companies, I know a lot of people on the internet like to think that they're smarter than the executives who are billion-dollar executives. And they go, well, it's slowing down and Apple's going to go belly up because their phones aren't inventing. Apple's not stupid, right? They know that they can only invent so much on this one particular product before it fizzles or loses interest, or they just can't really do much anymore. And we have gotten to that point for now where these phones have sort of plateaued. They're not going to be doing anything anymore. You don't think Apple is sitting there going, oh no, now what are we going to do? Of course they're not doing that. They're Apple and they're smart and they have other things in the pipeline. They're looking around, they're paying attention. They probably know stuff that they're working on that we have no idea about, that when they do invent it, we're going to go, of course, that is awesome. Why didn't we think of that? And one of those things is their phones are maybe slowing down. Other things are going to start to pick up. I'm talking about the watch. I'm talking about wearable glasses. There's going to be other things down the road, like I said. These companies aren't stupid. They're not in the moment and not having some sort of long-term plan or long-term vision. They're not sitting there going, hey, you guys, when this phone stuff dries up, we're done. They're always working on something. And I believe to make it, pull it back, and like Amazon. You don't think Amazon, they just started as books. Of course they just started as books. But you have a vision for these companies. You start to say, okay, what else can we do? What else can we do? And it keeps growing, keeps building, keeps expanding. And that's what these companies are. So right now we're looking at Tesla going, yeah, Tesla, there's Neo and there's Nikola and there's Fisker and there's all these electric things and they're going to be done and Tesla's over. Come on. It's Elon Musk. I mean, you can love him or you can hate him, but the guy is pretty smart. He knows a fair deal about this. You don't think he's just sitting there going, oh man, when the cars are done, oh, I'm done. What am I going to do? He's it's just not how he is. He's built this humongous empire for a reason. It's not just like, I think we're so short-term in the moment looking at this, going like, Tesla's hit it, it's plateaued, it's, what can they do after this point? I'm sure 20 years ago or longer, someone was looking at Amazon going, it's just books. What are they going to do? And now here we see Amazon. I can get my package tomorrow if I order something. I can get music. I can watch a movie. I can say, hey, Alaska, what's the weather? We can do all these crazy things that Amazon, people probably discounted 20 years ago as just a book reseller. And people are doing that now with Tesla. Oh, they're just look, nobody knows what Tesla's got in the works, right? They could have a lot of stuff in the works for all we know. They could be developing a smartphone right now with one of their crazy batteries, right? Where you don't have to charge the phone for a month or some shit like that. They might have stuff for solar. I mean, we know they're working on solar. They might be implementing some things like that will start adding to their revenue, right? So their stock price might actually end up staying, there might be pullbacks here and there. There might be corrections. There might be big sell-offs. But we might get to a point where their stock price stays high, but their P to E ratio gets lower because they're making more money on more products. They're expanding. They're not just cars. They're batteries for the home. They're batteries for your technology. They're solar panels for your house, whatever it may be. So we tend to write off these companies in the moment, But the reality is they're not stupid, and they definitely have a long-term vision. So Tesla being added to the S&P tomorrow, it's probably going to pop. It's probably going to go up a lot. I wouldn't be surprised if there was profit taking down the road, because all these funds, all these people are going to be loading in. So other funds who might have already owned Tesla prior to the S&P funds having to add it might be taking profits. You might have a lot of retail investors taking profits. You might have a lot of very wealthy investors who own huge sums taking profits. The thing about the stock market is you can argue either side of it, but there's only one way to know who's right, and it's to give it time. That's the only thing. Like, I say this a lot on my TikTok videos. Someone will comment and they'll say like, oh, that company's done, or oh, that, you say the S&P can go up 12% a year, but just because it did it in the past doesn't mean it'll do it every year moving forward, which is true. There's no guarantees. Sometimes the S&P could go up 7%, sometimes it could go up 12. It changes every year. But the one thing I always say in these videos is, okay, like, you might be right. Let's check in 20 years. Let's check back here in 20 years and let's see who was right. Because that's the only way we're going to know. And until then, everyone's just bullshitting their own theories. I think it's going to go here. I think it's going to, you ask me, where does Amazon go? I say Amazon could be a $10,000 a share stock one day. Sure, why not? So who knows? The point is, who knows? So the next thing I wanted to hop in on is, I want you to learn from my minor little teeny mistake. One of the stocks that I trade lately has been Blink, the electric vehicle charging station company. It's only been on my radar for a couple of weeks. I've only been trading it shortly, like within the last couple of weeks. But I like the company. I believe that these charging stations will definitely be the future, and I wouldn't be surprised if one of these mega gas station companies like Exxon or Mobil or Sunoco or some shit like that buys one of these charging station companies and starts implementing these fast charging stuff in their gas stations. Because as more people switch to electric vehicles, less people are going to be buying gasoline. And these gas companies, back to our previous point, are not stupid. They can clutch on as hard as they want and say, no, keep buying gas vehicles. But the future is coming. They know it. And they're going to start planning to phase out some of their gas station lines at their stations and replace them with solar charging or electric charging. It only makes sense for companies who want to survive. And these charging stations, I don't know, because I don't have an electric vehicle. I don't know how long it takes to charge a car. Is it overnight? Is it an hour? Is it 10 hours? Who knows? I'm sure someone in the comments below will tell me how long it could take. Maybe it's 3 hours. Are there fast charging stations available where you can get where you can get a quarter of a charge in a half hour? It doesn't matter, because 10 years from now, this technology is going to just improve, right? We're going to get to a point 10 years from now or whatever, when you go to a charging station, you don't go to a gas station, but you go to a charging station and you can charge your whole car in 10 minutes or 5 minutes or 35 seconds. Who knows what it's going to be? The point is, you get in on these companies now because you believe long-term. For me, though, I've been trading them because they've been having wild swings, right? Every time Joe Biden, who's the president-elect, comes out and talks about green energy or renewables or global warming or climate change, all these electric vehicle and green energy renewable stocks pop. So as a trader, I'm sitting there going like, oh, it's down. I'm going to buy it when it's down, and then I'm going to ride the rally up when there is one in a couple of days, because, it's on the news 24/7. And speaking of being on the news 24/7, I was an idiot. And what happened was, I had a lot of shares in Blink on Friday, and they were up significantly, and I sold them. I took big profits. This morning, I put on the TV, and what do I hear? Joe Biden is set to make his cabinet picks for his environmental cabinet team, whatever. And I'm watching that, and I'm going, motherfucker. I sold my Blink stock on Friday, and had I known that Joe Biden was going to be making his cabinet picks for the EPA and all of that, the renewables, I definitely would have held until Monday. Why? Because if you're watching Joe Biden's speech today, he said electric vehicles and electric charging stations like 10 times. God. So the tip here, the lesson here, I guess, is to be always paying attention to the news. Have it on in the back. Look, whether you like CNN or whatever news station you like, or even don't like, doesn't really matter. You just want a news network on in the background that is talking about stuff in the weeks to come. You just want to be paying attention to stuff because you never know what you might hear. Tune out the stuff you don't like, listen to the stuff that you do like, whatever, but just kind of in the background. So when you hear something like, oh, on Sunday, Joe Biden is going to be picking his EPA and announcing his EPA stuff. Oh, I'm not going to sell my Blink stock now. I'm going to hold it because I've heard this bit of news. The last thing I guess I wanted to talk about, somebody asked me on TikTok, this is the point of the show when we talk about your questions. And if you don't know, if this is the first time watching Cash Out, I get a lot of really good questions on TikTok. Most of them I can answer within a minute. Some of them need to be explained longer. I don't want to rush through it, leave stuff out. So what I've decided, that's kind of the reason that I created this show, is to come on here and go more in depth to some of your questions. So the question that I was asked was, 2020 now is over. What is your outlook on 2021? What do you think the markets are going to be like moving forward? So to recap 2020, it was a wild year for investing and trading. The stock market just had these humongous swings. So 2020 for stocks has been absolutely crazy. If you follow me on TikTok, you know that I'm primarily a swing trader. I don't often day trade. It's just never been my thing. That changed in 2020. In 2020, and even a little 2019 and 2018, I was doing more and more day trading because the swings in the markets were just too volatile, and I was getting too nervous with the idea of holding my stocks, not even overnight, but just through the weekend or through the week, when you never knew what was going to happen, right? And you look at March with that big, huge sell-off, and then we have days where, oh, there's a vaccine, and the markets go through the roof, and then, oh, wait, the vaccine might not be out for a while, and then it crashes. So for me, I was doing a lot more quick stuff, day trading or very short-term stuff. Moving forward into 2021, I predict, and I could be wrong, that like I said, we only have one metric here, and that's time. We'll know in 2022. But in 2021, Wall Street doesn't often like chaos, right? They don't like disorder. They like stuff that is pretty clean, cut and dry. They like knowing stuff is going to happen, even if it's bad, right? Like if you wanted to look at something like Luckin Coffee, Luckin was involved in this huge fraud and scandal. And last week they said, all right, we're going to pay 100 and something, like just under $200 million, and we're going to settle our fraud thing. And the stock went crazy. Now you might be thinking, whoa, but like, why is it they're going to pay like almost $200 million? Why is the stock going crazy? Because that's what Wall Street likes. They don't care what's happening. They just like finality. They just like to know that it's over, it's been resolved, it's done, we're moving forward. We're done with the fraud stuff. That was last year. That is an old dead story. They paid, they're done, they're moving on. It's like Boeing. When a plane crashes, it's this horrible story. They settle, they pay out to the families, and we move on, and the stock goes back up. And that's kind of what Wall Street likes. They don't like unpredictable, wild, volatile markets. I think, though, that they probably have come to like it a little bit because it's been very lucrative for me. So I'm going to imagine it's also been very lucrative for them. I don't think this insane volatility is going to go away, but it might calm down a little bit just because if you compare Joe Biden to Trump, Trump is very unpredictable. He's very, he doesn't play by anyone's rules. He does what he wants. He says what he wants. You don't like it, too fucking bad. Joe Biden, and that causes this in the markets. Joe Biden is a lot more measured. He's a lot more calm. He doesn't tweet 300 times a day, which can also cause this in the markets. So I would imagine a couple things are going to happen. For starters, I think markets are going to be a little bit more calm. That doesn't mean that the markets can't go up, right? If you look at Obama, Obama wasn't tweeting 300 times. He wasn't this wild and unpredictable president. He was relatively calm and neutral and whatever. And the markets went way up under Obama's 8 years of presidency. They've also gone up over Trump, but if you look at the chart, it's going to be like this, unlike Obama's, which was just a slow, steady climb. And I imagine because Joe Biden is trying to be like Obama 2.0 with like a little bit more of like a progressive kind of thing, but maybe not, who knows. I imagine it's going to be much of the same. because he's going to focus more on infrastructure. He's going to focus more on climate. He's going to focus more on bringing back jobs, putting in this virus to an end. So I imagine that when he's less focused on the stock market every single day and more focused on jobs and the environment and the economy and coronavirus and all of those things, that we'll start to see, and there might be a steep sell-off in the beginning, and he might be raising taxes on people who make over a certain amount. You know, we have to see, right? It's just because he says it doesn't mean it's going to happen, and it still has to get passed. But there might still be that assumption that taxes might go up. So you might see a correction or a pullback right before the year ends. Or at some point, I don't know because I'm not an accountant. But I would imagine that stocks could pull back a little bit. But then once all of that uncertainty is put to rest, I think it's going to be a slow climb up. I don't know if it's going to be a raging bull market. I don't know if it's going to be more of this. It might be more of this, but just tampered down a little bit because there's less unpredictability going on. I don't know. We're going to have to wait and we're going to have to see. That was the only real question this week from TikTok that I felt like I needed to come on here and give a longer answer to. So I think that wraps up Cash Out episode 3. I don't know, 3 like this or like this. I feel like when I do 3 like this is too, I don't know. Some people do it like this. Anyway, that's it. That's episode 3. Thanks for watching, and we'll see what happens later on this week.